Hey, let's speak a bit about the British pound. It's up against the US dollar and could potentially extend its gains and reach as high as 132. So it's time to buy, or should we maybe just book profits here based on what we talked about earlier this week? Let's talk a bit about the British pound, and let's also talk a bit about the euro versus the USD. Okay, so earlier in the week, and even before that, I've been saying that we should be buying around these levels, this whole area here. The buy spot was a little bit higher at one point, and then I lowered it. And the general idea is just that, we should be buying on dips. And yesterday at 11, we did reach down to support, and then we went upwards. In fact, we've been in this support area for quite some time. So we effectively just reached our first take profit area. Now, I would book profits here, or at least 75% of it. Why 75%? Because we could potentially extend up to 132, and we want to be part of that. But buying here right now wouldn't be an ideal situation, because if we buy here, the last low is down here, so I would be risking some 200 pip, and if we reach 32, I'll just make 143. So the risk reward ratio here is not ideal for that. So what should we do then? I think when and if we have a break here, say we go up a bit, then we can probably apply something like a Fibonacci tool from that low. Say we'll go up to 132.22 today. So then when we come back down to something like 130.28 or 129.95, then we could potentially be interested to get involved there. So we wouldn't need to wait for the market to tumble all the way down to buy when and if we have a break here. So if we have that push and then we come down, then we can usually do something like that. For now though, the price is still capped by this level, and as long as it is capped, there's always a risk that this actually just tumbles all the way down to the lows. And that's why, at least for today right now, I'm not going to change the outlook here. I will continue to be bullish, but the requirement is that we go down to this area here. That's where I think people are going to be buying. Here's the GBP versus the euro versus the dollar, and as you might remember, we got stopped out here I think on Monday or something like that, and I turned neutral. So I said, let's wait for potentially this trading higher, and we're now above that level, but we're so close to resistance at 119, followed by 119.88. So again, if I would be buying up here, if I buy here, the market really needs to be super strong, and I could potentially be making about 128 pip. At the same time, we have the last lows down here, and that means that we need to risk 180 pip. So I'm gonna look to make less than what I'm actually looking to risk. That's why I would like to see a 50% correction. So if we get a 50% correction of this move, and we go down, then in this area here, if we buy at the upper end of the area, I'll be risking 101 pip, and if we hit this high, we'll be making 123. So that's a little bit more than a 1-to-1, and if the market indeed strongly trades upwards, we can go all the way up here, and I get a 2 times risk reward ratio. So that is what I am focusing on. Also, please bear in mind, guys, we do have the elections coming up in exactly 2 weeks from now. And we are seeing some moves, like in the Aussie dollar, for example, are very weak. Also the New Zealand dollar, because we're seeing a bit of risk-off moves. But I wouldn't take nothing for granted, and I would be very careful. Like Euro, Aussie dollar, something I was looking at. We finally did have a massive break there, but on the way, I actually got stopped out. You have pound New Zealand dollar that was looking like it was going to break out, but didn't really break out. You have things like crude oil, which had a breakout yesterday, but didn't really work out. And then you have things like copper, which I was looking at, and there we did have a nice breakout. So it's a little bit more mixed here. People are not 100% certain what's going to happen next. And this is all normal. It's all normal. After some strong trending markets, you have less trends. That's just the way it works. So we did have an amazing year when we just firstly went down nicely, and then up dramatically, and then down nicely, and then up nicely. So after such a big move, the markets would naturally just cool off, and especially if we have an important thing coming up like the US election. All right, don't forget to check out in the first top comment of this video, you'll see a link to a trading course that I developed. It's called the Premium Trading Course. You get that for free with an ATFX Real account, so you can check that link out. If you do register on that page, you can see the first hour free. And then, of course, you can make up your mind if you want to open up a free account with ATFX. I personally think it's like a no-brainer, like a free account, free education by someone that's been trading since 2006. So check that out. So don't forget to subscribe, and don't forget to check out the other videos we have uploaded to our YouTube channel today. With that in mind, have a great trading week, and I'll see you guys later on this week, or possibly maybe Monday. Thanks so much, and bye-bye.